valuations outside of the U.S. are much more attractive than U.S. stocks. However, they don't have the clear catalyst that we have in terms of concerted industrial policy, a stronger foundation upon which to jump off of. So what we see is actually a little bit of bifurcation. If you look in the second half of the year, for instance, for Europe, you could see lower energy prices based on, in part, some of what the Trump administration is focused on. You could also see potentially resolution in Ukraine, and then lower rates. The European economy, for instance, much more interest rate sensitive in this last cycle than what we saw here in the U.S. And so there are some catalysts potentially to justify investing in these more attractive valuations. We do see them in the second half of the year. The last thing I would add, look at China. Think about some of the comments coming out of the Politburo this weekend. If we see, focus on what they're calling kind of vigorous support of consumption, that could also be a catalyst for China in the second half of the year.